right, greetings and thank you all for joining our webinar titled Export Finance, Federal Resources to Grow Your Business Through International Sales. My name is Shariah Johnson and I am the co-chair for NADEC's Education and Outreach Committee. We are glad that you are joining us today for this webinar. Well, you will learn how to obtain financing, protect your foreign receivables, increase your level of awareness on export counseling, and understand a business development grant. I have the pleasure of introducing our speakers for this webinar. So once the screen advances, I'll go ahead and tell you who we have for today. So our first presenter for today will be David Leonard. David is the Export Finance Manager for the SBA Office of International Trade, or OIT, stationed at the Atlanta U.S. Export Assistance Center. David supports the USEAC offices serving small business in Alabama, Georgia, Kentucky, and Tennessee. David will focus on the services of the SBA Office of International Trade with an emphasis on the financing programs. The mission of SBA's Office of International Trade is to increase the number of small businesses that export and the volume of exports by small business concerns. It also has the legislative mandate to represent small business interests in multilateral and bilateral trade negotiations. As a result, the office is structured around the most common needs of small businesses, including information, financing, and market access. OIT provides access to financing through the International Trade Finance Division, information on and early stage support for exporting under the State Trade Expansion Program, as well as access to international markets under the International Affairs and Trade Policy Division. So David will be our first speaker. And then our second presenter for today is Susan Kentenar. So immediately following David, you'll hear Susan. Susan joined the Export-Import Bank of the United States in July 2012. She serves as the Regional Director for the Eastern Region. Susan has worked in international banking for over 30 years, from Asian International Bank, UBAF Arab American Bank, European American Bank, National Bank of Canada, Fidelity National Bank, Citibank, and Regions Bank. She graduated from New York University with a master's degree in industrial psychology and also graduated from Pace University, New York, with an MBA in strategic management. She frequently is an invited speaker to various international professional associations. And in addition, Susan is a permanent accredited certified cash manager. Susan will be discussing how the U.S. government through the Export-Import Bank of the United States can help exporters of U.S.-made products and services increase their international sales through financing and credit insurance. Okay, and so before we begin, a few housekeeping notes. So please use the Q&A box for your questions, not the chat box. The panelists will make sure to answer your questions at the end of the session. And if you would please give us a moment, we're going to switch screens and then we'll turn it over to David.
David seems muted.
Excuse me, yeah, it's taking me just a moment to share my screen here. Bear with me, please, for just a moment, folks. We'll be ready to go here in just a moment. So, apologies for that brief delay there. Good morning to everyone. My name is David Leonard. I'm with the Small Business Administration's Office of International Trade. I work out of the offices in Atlanta, Georgia, and I'm one of the regional finance specialists that SBA has in USEACs around the United States. There are currently 20 of us in 20 different offices around the United States, where we actually sit in the USEACs with our colleagues from Commerce, Department of Commerce, which is our landlord, we like to say, and then also Exim Bank, my partner in Exim Bank, who we are the financial services that are provided by the U.S. government. SBA and Exim Bank provide those services, and that's part of what we're going to talk a little bit about today. As we go through the different information, again, just feel free to go ahead and put any questions in the chat, and we'll be happy to answer them at the end of both presentations. So with that, when you're thinking about SBA, you have to think about it in terms of we provide multiple different types of loan programs to meet the different needs of businesses at the different stages, and also the direction. How is the business going to use the proceeds from the loans or capital infusion, and when that money comes in, is it going to be used either for domestic operations or to go ahead and support domestic operations exporting, which is what I work within. So when you think about SBA, we start with our alternative lending programs. These are generally provided through non-bank lenders. It's made in the form of what we call microloans, which are loans up to a maximum of $50,000. These are generally loans to help businesses get started, that startup stage for a business where you need the financing to go ahead and get things off the ground, where you don't have currently have any type of financing, or you maybe haven't established business credit previously. This is one of the ways to go ahead and get that off the ground. Our next most widely known program is what's called 7(a) lending. This encompasses the majority of what small business financing SBA does. We give a guarantee ranging from 50% up to a maximum of 90% on the export loans to the banks, credit unions, and non-bank lenders who actually make the loans. So that loan then, that guarantee helps take away the risk to that lender so that they can make you a loan that they can't make to you conventionally. So this is the programs that you look at most of the time. This goes to our Community Advantage program, of which one of the loan programs is our international trade loan is included in that. The maximum loan's up to $250,000. That's generally administered by mission-driven lenders. This is lenders that generally aren't deposit institutions where you're going in and borrowing. And most of the time, those are available in each state, but the best way to access their services is through our Lender Match. On SBA's website, we have a link called Lender Match where you can go in, upload your information, and it'll pair you with lenders nationally that will be interested in talking to you about your access to capital, the capital you're trying to seek. The next type of programs we have is our basic domestic programs. This is in the range of express loans, our regular 7(a), which are term loans most of the time, our cap lines, which are revolving types of loans, but it focused specifically on domestic. So this is one of the important things of keeping good books, because we actually ask you, when you're looking at it, you have to look at it in terms of two different streams of income or revenue coming into the business, and the financing for that is generally financed through two different programs. So the domestic programs provide that capital for small businesses that are going ahead and trying to get loans to grow their business or expand their business through what we call debt capital. The loans range generally in size from a minimum of around $5,000 up to a maximum of $5 million, which is generally our loan limits on all of our loan programs, the maximum loans for all SBA loan programs. And then finally, our export programs, which is what I'm going to talk about today, mirror what we have domestically. We have our express loans, which are business development loans, our term loans, our revolving capital loans called our export working capital. And then we also have some other types of financing through the form of a business grant that we administer through the state governments throughout the United States. And we'll talk about all those during my presentation today. And then finally, we have our 504 lending program, which is our loans where we provide capital for fixed asset financing, where a small business wants to buy a piece of real estate for owner occupation to operate their business. So owner occupied commercial real estate or large pieces of equipment. The advantage of the program is it provides you long-term fixed rate financing for a low down payment, and allows you easier for businesses to get into that where they want to go ahead and buy that fixed asset that would normally might be out of their reach. So going back to our export programs, when you're thinking about the export financing, again, there's some basic ideas of how we administer this. SBA, again, everything in all our lendings is about partners, about partnerships. We have partners with our non-bank lenders, through our alternative lenders, through the banks and credit unions throughout the United States. And just about every bank and credit union in the United States uses SBA programs in one way or another, but they don't, most banks don't provide all of our programs. So that's one of the keys in terms of understanding when you're reaching out to who can provide the capital that I'm specifically seeking to go ahead and facilitate the action that I'm trying to do through my business. So the access to capital is the key, and how do you get to that through that partner? We provide exporting products or services, and again, we can finance products or services either directly or indirectly shipped from the United States generally. So the key here being is we'll talk some more a little bit later about indirect exporting, but we're looking at the first key piece of information I want you to keep with you here is that it's you when you're talking about exporting, a lot of the questions is it just products? No, this is products and services can be financed either for direct exporting or indirect exports. As I said earlier, we have staff, and it's actually in 20 now, 20 U.S. Export Assistance Centers now, where you can go ahead and get assistance throughout the United States. We combined our offices in Florida into one office in Miami. Previously, we had an office in Tampa. We also provide financial assistance. As I said earlier, we are the financial program that the federal government provides along with Ex-Im Bank. That's why we're represented in the USIAC, because we're the primary agencies to provide this capital or financial assistance to small businesses. Ex-Im Bank is a program that really enhances what SBA does, because as I said, our maximum loan is $5 million. Ex-Im Bank, as Susan will talk about, can look at much larger needs of small businesses of all sizes. And then, as I said earlier, then generally our partners that are out there are commercial services, Ex-Im Bank, our international small business development centers, state export offices, and of course the National DEC, who's providing and sponsoring this presentation today. And we appreciate very much allowing them to get on and provide this information to you. So, indirect exports, what is that? What are we talking about? Well, this is something that's really important, especially you hear about in today's markets, and one of the reasons why we're possibly feeling some of the inflation issues now. Indirect exports is where you've got a business, small business like yourself, that actually sells to another domestic business. You're not exporting the product, but you sell to another domestic business who incorporates your product or service or resells your product or service to a foreign buyer that then exports that product. So that's an indirect export. All of our loan programs, all of the SBA loan programs, the three that I'm going to talk about today, the Export Working Capital, the Export Express, and the International Trade Loan, are available to businesses, and banks can get the guarantees, the higher guarantees, to go ahead on indirect exporting. So that's one of the key things when you're looking at building your export business plan. You want to identify not only the export sales that you plan on having in the future, but any sales you make to another domestic business who then resells your product to a foreign buyer, indirectly exporting your product. So this generally in what ways most common that you hear about this, that you hear a lot about, is a company is in the supply chain of another business. Let me give you an example. I have a company in Dalton, Georgia that we help with financing that manufactures carpet. They sell that carpeting to a car manufacturer in South Carolina, who then incorporates that into their vehicles and then exports those vehicles all over the world. That then is an indirect export, because that carpet manufacturer is in the supply chain of that car manufacturer. They provide the carpet to help them go ahead and build their vehicles. The key there being is when the carpet manufacturer needed to expand their capacity to go ahead and accept this new contract, to go ahead and provide this contract for the manufacturer, they needed the loan to go ahead and do that expansion. And through the SBA loan program, and as an indirect exporter, that allowed the banks to go ahead and get a 90% guarantee, which helped induce the bank to make them the loan to go ahead and help them create that expansion opportunity to make those sales to that company in their supply chain. So indirect exports. When you're thinking about our programs, the Office of International Trade, Shreya already talked a little bit about what we do, but it's basically we provide three primary services when you're thinking about financing. First of all, the Small Business Development Center is an important partner in what we do. We fund the Small Business Development Centers through the state, generally through the university system. There's one in every state, a network set up. In Georgia, where I sit, it's through the University of Georgia. And then they have offices at the different schools and universities around the state where they've set up offices of professional counselors that can help businesses go ahead and get their business off the ground. Most of those do domestic businesses. That's 99% of what we do. But in every state, we either have an office or network that provides assistance specifically for international sales. In other words, where you're going to go ahead and, as we talk about today, our focus is on exporting, but the Small Business Development Center looks at an international trade. So they can help you in both importing and exporting. And there's an International Small Business Development Center in every state. There's a link here at this hyperlink that's in there where it says find a local advisor. When you get a copy of the presentation, you can click on that link or just type in that website that you see there, americassbdc.org, and that takes you to the national network. You can put in your zip code and it'll tell you where the local SBDC is, and then you can also find out where the international SBDC is in your state where you're located. So that's where most of the everything starts, where the rubber starts meeting the road, because the Small Business Development Center will help you put together an export business plan, help you make decisions about markets that you want to enter, help you go ahead and provide information about available markets where you can be competitive. Lots of different information, a whole range of resources that you can tap into. You can act toward a mentor for your business for the entire life of your business. The key is the Small Business Development Center has both domestic and international counselors to assist you. Next, one thing that's unique in terms of exporting is normally there aren't grants out there to help you get a business off the ground. Everything is about business loans, borrowing money. But in the export world, we're actually have a grant that was created by Congress that's administered by SBA called the STEP grant. That's the state award that we go ahead and provide. And it's administered through your local state or territory, where they go ahead and you apply for the grant. It's a reimbursement grant and it's a competitive grant. Each state applies for a certain amount of money each year. That money is available. You apply for the grant to say that you're going on trade shows. You're going on a trade show with your governor. You're going on a Gold Key mission with the Department of Commerce. You're getting training from the Small Business Development Center for your staff. There's a whole very list of eligible expenses that you can go ahead and, when you make the expense, then you're reimbursed for that. But what you're doing is you're applying for the grant. You tell them how you're going to use the money after you go ahead and complete the task or whatever you're doing, that business development. Then you turn in the receipts to the state. Generally, it's the state economic development entity that can go ahead then and they'll reimburse your grant. For a list of the STEP awardees, you can click on the list there that says Directory of State Awardees in every state, actually in 44 states and all of the territories. there are STEP grants available. In some states, they have their own internal program, like the state of Florida has their own internal grant program separate from STEP, and so they don't administer that. But most of their 44 states, as I said, provide this grant where you can go ahead and use it for business development. It's a great opportunity because, as I said, most of the time you're having to use borrowed funds to get this off the ground, but the STEP grant is out there available to help you go ahead and look for business development, get reimbursed for business development expenses, specifically to start or grow your exports. And then finally, we have our financing programs where you're looking for financing to go ahead and do specifically exporting. Our programs, as I said, they're tied down to either where you're making domestic sales or you're making export sales. An export sale is a sale to a foreign buyer. And as I said, there's you can look at the list of the USIACs, because the way we administer this is based on where your business is located. That's the USIAC that will work with you because they're going to be familiar with the local market that you're in. Because everything that's really one of the key ideas that I tell everybody, programs are national, but resources are local. There's a lot of the programs out there, but how you administer, how you access those programs, what's available in your market, that's going to be where it's really key, reaching out to your local US SBA staff and the USIAC there, because they can point you in the direction of where you can get the financing that you're looking, or look at the whatever type of export needs you may have. Because one of the keys in terms of working, like the DEC, who's our sponsor, who's our setting up the program today for us, is that once you come in and you work with one of the agencies like Commerce, the state, SBDC, XM, SBA, whatever, it gets you into the network where we can go ahead and refer you to our other partners for the services that you need. So 3 basic ways to go ahead and work with your business. Small Business Development Center to help you get your business off the ground and grow your business and understand how to get those international sales. The grants to actually go ahead and identify clients and go out and identify, get your businesses ready for exporting. And then finally, the loan programs to go ahead and we'll talk about those more in just a minute, where we provide the 3 different loan programs from SBA. So when you're thinking about a small business, when you're thinking about the sales cycle, generally you're thinking about, okay, sales development. I'm going out and I need to get market intelligence. I need to find those buyers. I need to set up my website. I need some product literature for marketing. After I've done that, then I may have to go ahead and ramp up my production and delivery. And I need to go ahead and maybe buy some equipment. I need to maybe have storage where I'm going to buy the product and store it. I may need to go ahead and hire new employees. I may need to go ahead and expand my capacity, or just get my business off the ground. That's production, your production and delivery side. And then finally, the fulfillment of orders, where you've actually gotten an order from a buyer and you need to pay for the inventory, you need to build the product, you need to finance the orders, account your client, the buyer may be asking for open account terms, you need to fund the insurance and freight costs, or maybe issue bonds or standby letters of credit. All of those actions are the normal sales cycle of a business going through, and the needs as you go through that. And our loan programs can actually help you meet all of these needs as we're going through the sales cycle, as the business goes through the sales cycle. The first is our STEP grant. I've already touched on this already a couple of times. The STEP grant is a grant that we give to the states who administer the grant. They approve the grantees and they reimburse you the funds once you've made this done the action, the business development and seeking reimbursement. So that's available through every 44 of our states and all of the territories here in the United States, where you can apply for the STEP grant program. Our export finance programs, there's 3 programs, and we're going to touch on each of these briefly, because to get into them depth, they can pretty much be pretty broad. But one of the things is, when you're thinking about, think about that sales cycle again, one of these 3 loan programs, in addition to the STEP grant I just mentioned, provide that financing that you need. On all of the loan programs, though, there's some common regulations that you have to meet to go ahead and get the loans. You must be small per SBA size standard. Ex-Im Bank is our partner, provides a country limitation schedule that talks about availability of credit in every country in the world, but it also lists the countries where it's illegal to do business. That's one of the requirements, a regulation for SBA, is that we can't make loans to any business that's going to do business with a country where it's illegal for us to do business with them. Currently, there are 4 countries that are listed in the limitation schedule: Cuba, Iran, North Korea, and Syria, that we can't do business with, but that changes. There's been other countries on that list up until quite recently that change, and the countries are either added or come off that list based on the determination of our government. When you're thinking about the business and you're applying, the actual applicant business, the business applicant, think of the business as an entity, the ownership and management of that business must be 51% U.S. citizens or a legal permanent resident. LPR stands for legal or lawful permanent resident. So you must be either a U.S. citizen or a lawful permanent resident to go ahead and apply for one of our loan programs. For our loan programs also, there's no content policy except for the STEP grant. But the content policy, Susan will talk a bit more about that later, but it generally where you have to have U.S. content to go ahead and get assistance from the agency that you're working with. SBA has no content policy except through the STEP grant. Military sales are eligible through SBA. If you're making a sale to another government or entity, and if your client, the seller, on the you the seller or the buyer are both licensed to go ahead and facilitate that sale, then we can go ahead and provide the financing, the guarantee to the lender that's providing you the financing to help you go ahead and make that sale. And then you have to have an export business plan and a 12-month export projection for eligibility on all of our loan programs. So that's something where the key of the Small Business Development Center is really good, because they can help you put that together. Our first kind of our basic loan program is our Export Express. The maximum loan is $500,000. It's specifically for business development. The loan program can be used for export development, to finance orders, if you need to go ahead and issue a standby letter of credit, or if you're trying to purchase real estate or equipment, anything that fits within that maximum loan limit of $500,000 can be used for Export Express. It's our most flexible loan program because it can be structured either as a term loan, which is what most banks do. And that's why you'll find most banks, when you hear me talk about a term loan, most banks, almost all of the banks out there provide term financing, and so they do business financing. And so the Export Express can be structured as a term loan or as a line of credit. It can also be set up as a line of credit. And there's some of the lenders that provide that as a line of credit, but the majority of them, in using the Express loan, do that as a term loan to provide this type of financing. Our next loan program is our international trade loan. This is our most popular loan program because it's our regular 7A loan program where the banks get a 90% guarantee. The financing ranges anywhere from, generally the minimum loan I've seen on these goes down to around $100,000, $250,000, up to the loan maximum of $5 million. It can be used, structured as a term loan for the purchase of fixed assets, where you may need to go ahead and do expansion on your business. You need permanent working capital. If you want to go ahead and buy an existing business, if you're trying to buy in a business to expand your capacity, expand your export capacity, you can use this loan program to buy that business. And you can also use it for refinancing of debt to go ahead and improve your cash flow to help you go ahead and facilitate exporting, because the key on all these programs is that you have to show in the export plan how the loan proceeds are going to help you either start or grow export. One of the keys, though, I want to point out about this on the loan programs, these are generally not for startup businesses. These are generally for businesses that have already been in operation for at least 1 year minimum, most of the time 2 or 3 years. And that's on all of our loan programs, except for the international trade loan program. As I talked about earlier, this is available through our Community Advantage program, through alternative lenders. The maximum loan there is available is $250,000, and you can get an international trade loan through application through Lender Match to go ahead and see about getting if you're a startup business and you're trying to get financing, the international trade loan is your facility that you can be accessed through our Lender Match. And then finally, our export working capital program. And this is something where what we provide complements what Ex-Im Bank provides also, and how we work together. Again, the maximum loan is $5 million. This is set up generally as a line of credit, a working capital loan structured either for single transaction or as a revolver that revolves over generally a 12-month period of time. It's renewed annually. It can finance the orders where you need to go ahead and create inventory or buy inventory, the materials, the labor, all the production costs, cost of goods sold. The advantage being is you can leverage your foreign accounts receivable, your inventory, or under our transactional plan, where you can go ahead and get loans against purchase orders or contracts where we'll actually make a loan, cost of goods sold, based on the contract or purchase order you have. So normally, foreign accounts receivable, banks can't lend against those receivables. With SBA guarantee, those foreign receivables, the inventory, and the contracts from the buyers can be used to leverage that you normally can't leverage to get the financing you need to facilitate a sale. So the big key here is this provides you that working capital will actually fulfill those orders. Again, the maximum loan on this loan is about $5 million. The minimum loans generally on these is about $250,000. If you need something under $350,000, then that's where the Export Express program would fall back into place. Then, right now, this year, under our SBA's, under congressional relief, we have what's called fee relief. There is a fee on SBA loans that's charged to the bank, that they pass on to you, the borrower. There's an upfront fee and an ongoing fee. That upfront fee is waived on all 7A loans for up to $350,000, a maximum of $350,000 or less, until September 30th. That those fees, the upfront fee and the ongoing fees, are waived. Here's a list of our centers where we have SBA staff located. I'm here in the Atlanta office. As you can see, there's offices all over the United States, and each office covers a specific territory. As Shariah mentioned at the beginning, I cover small businesses serviced by the UZX in Alabama, Georgia, Kentucky, and Tennessee. But for instance, if you needed a loan to go ahead and facilitate your business in Minnesota, you talk to my colleague Carlos Sosa in Minneapolis, and because he covers the Minnesota, North Dakota, and South Dakota regions. So with that, here's my information, and I'm going to turn it over to my colleague Susan Kintar. Susan.
David, I'm going to jump in real quick before we jump, because we have some specific questions. I think we were going to hold them to the end, but before, they're just two for you.
Okay.
That's okay. Okay. So one was, what do you mean by non-bank lenders? If a business is a startup and has little to no money and they are needing a loan under $50,000, would they qualify for the alternative lending?
Okay, a non-bank lender is an institution that usually a nonprofit who borrows the money from the government, from the SBA, or borrows the money from the USDA, some other federal agency where they borrow that money and then they lend that money. They get their monies from those borrowed funds. So you have to pay them back because they have to pay the government back. So that non-bank lender provides that financing, because banks generally don't fund startups. That's one of the kind of misconceptions out there. If you're a startup business, if your business is less than 2 to 3 years old and you don't have historical financials to show repayment ability, unless you have an asset where you can walk in and say, here's my house, I want to make a loan against my house and start a business, great. But most of us don't have that. So the advantage of the loan programs that I'm talking about, like the alternative loan programs, it allows you to go ahead and access financing where you can go ahead and get that business off the ground. And that's done primarily through two programs. our microloan program, which has loans up to a maximum of $50,000, and our Community Advantage program, which has loans to a maximum of $250,000. Generally, if you're looking something larger than that, you're going to have the assets in hand or the collateral that you can go ahead and borrow against.
Okay, thank you. And there was just one more. So does the refinance have a separate set of guidelines, or does it follow the same debt refinance policy of the 7A product?
The debt refinance follows the exact same policy because all these loans are 7A loans, the export loan programs, because they involve a guarantee to the lender, have the same rules involved as our regular 7A program, because these are 7A loans.
Okay, thank you, David. All right, we're going to transition to Susan now.
Okay, good morning, everybody. And thank you, David, for starting the topic, which is really important to any business. And I'm going to continue that topic. And that is money, because everybody, like the businesses, actually, I'm going to make the introduction first, how important money is, because you may have the right connections, you may have the right personnel, and you may have the right business plans. But if you don't have the money, then the business is not going anywhere. And since this is also export financing, I'm also going to focus on what David started, which is about export. Just like David, I'm housed at the U.S. Export Assistance Center here in Atlanta, Georgia. And I'm actually just like David, we all work together in partnership with other agencies like the U.S. Export Assistance Center, SBA, SBDC, Georgia Department of Economic Development, and other organizations like the DEC. So when you are thinking of Exim Bank, well, actually, people think that it's kind of big, like Exim Bank. Okay, so when we go to thinking what Exim Bank is all about, let's go to the next slide, right? It's all about reducing risk and, of course, next slide, next click, and unleashing opportunities. Because like, for example, if an exporter approaches a bank and the bank says, oh, you are an exporter, they're actually hesitant to lend money to you because there's so many rules, regulations overseas that they need to have the backup of government agencies like Exim Bank or SBA, right? So next slide. So what is Exim Bank? Well, actually, I'm going to explain Export-Import Bank of the US government. Although called a bank, we're actually not a commercial bank. We don't accept deposits, we don't create CDs. So why are we called a bank? Well, because actually we deal with banks. When we remember, I mentioned that the commercial banks feel more confident if there's a backup of government agencies. That's where we come into the picture. We provide, a guarantee and increase the level of confidence of banks to lend to exporters. Our headquarters is in Washington, D.C., and we've been established since 1934, and we have offices all around the United States. Our goal is actually to boost the economy of the US, to create jobs and assist in US exports, products and services, actually, in order to sustain and maintain the US jobs. Next slide, please. As I mentioned, Exim Bank seems complicated, right? But in actuality, we're not. We basically only have two products. which is financing and credit insurance. If you look at the right-hand side, right, let's focus on supporting financing. I use the word support because we actually don't lend directly. We lend through our delegated lenders. And financing is two-pronged. Either we support the financing of exporters here in the United States, or the foreign buyers who want to purchase capital goods from the USA, right? And they're in the developing countries, they need financing in order to afford to buy more from the United States. But of course, when it comes to foreign buyers financing, it typically works for developing countries, because in developing countries like, let's say, Nigeria, right? The in-country borrowing rate is like 28%, but if they want to borrow from the United States under the support of Exim Bank, depending on the credit worthiness, it will typically be like 5%, right? And so that's big savings. So that's the first basic product, which is supporting financing. And if you look on the left-hand side, that is credit insurance. Credit insurance is a direct relationship with Exim Bank and the exporter. And the basic purpose is risk protection, to encourage the exporter to provide credit terms to their foreign buyers and to explore the other countries that they haven't explored before. Why is it called risk protection? Because first of all, we will vet your foreign buyer to determine if they're good enough to do business with you and with us. And once approved, and you sell to them under credit terms, not cash in advance, but credit terms, then if they don't pay under credit terms, we, the US government, Exim Bank, would come in and salvage the exporter. We'll be the one to give the money to the exporter, and we will be the one to run after the foreign buyer. Now, with this backup, we would like you to sleep better knowing that you can extend credit terms to your foreign buyers and be competitive out there. Because if it's just cash in advance, or letters of credit, the competitor would say, hey, why don't you provide credit terms? Otherwise, we'll go somewhere. So you're stuck, right? So that's where we are here for. Next slide, please. Now, there are some eligibilities that we should make sure that we comply with. David mentioned that we have our country limitation schedule, which is in our website, www.exim.gov, right? And it lists down all the countries in the world, alphabetically listed and further segregated into you doing business to, are you selling to the government, or are you selling to the private sector? And next, it's again segregated into you doing business on a short-term basis, which is 1 year, medium term, which is 5 years to 7 years, and then longer than that is long-term. And it's very user-friendly. Either it's a yes or a no that we provide support. But we have to pay attention that there are certain notes too associated with a yes or a no decision. Just an FYI that we have restrictions on military buyers. But of course, we can have exceptions, because if it's dual purpose and that it's for humanitarian reason and for drug interdiction, that can be an exception to our support. Next slide, please. So continuing to the eligibility, the business must have at least 3 years of revenue producing financials, meaning to say not a startup, and must have a D&B number. And of course, if you don't have a Dun and Bradstreet number, just let me know and I can provide you with a special link so that you can get a free D&B number, and it usually can be available within 24 hours. Now for working capital, and short-term insurance, right? Short-term is 1 year, right? The products that are exported, by the way, it's products and services. We need to have US content because we are encouraging made in the USA products and services to be exported. So the US content for short term is 50% because we understand that products sometimes cannot be 100% US content, right? Let's give you an example. Suppose you have a plain t-shirt from the Philippines, right? And it's cost $1. And when it comes in here, you tie-dye it, you put fringes, and you put some embroideries. The cost is also $1, right? And you export it to countries that we can do business with. That to us is construed as meeting the US content. And of course, US content includes adding engineering, design, labor, overhead. Next, for medium-term transactions, medium term is 5 years and longer term and up, which is usually associated with foreign buyers financing. The US content changes to 85% US content, again, shipped from the USA to countries that we can do business with in accordance to our country limitation schedule. Next slide, please. Our support, actually, especially when it comes to exporters can actually sometimes manufacture their own goods and sometimes they don't. They just buy and sell. So for pre-export financing, those who manufacture their goods, they have to buy from their suppliers. The solution is a working capital guarantee because the lender can lend against export-related inventory and foreign accounts receivables. Now, when it comes to post-export financing, like for example, I have a customer who is selling frozen food, frozen chicken, actually, with a private label relationship with Tyson. Whenever he has a order from the Dominican Republic, right, he doesn't take inventory. He just tells Tyson to send it to the Dominican Republic, right, under private label. In that case, the working capital guarantee loan would typically not be the solution, but the typical solution would be credit insurance, which I'll explain in the next few pages. And for foreign buyers financing, it could be a loan guarantee, and it can also be a direct loan process, which I'll explain in the next few pages. Next slide, please. So the first basic product we have is working capital guarantee. Now, this is just like SBA, right? We don't lend directly, so we provide a guarantee to our commercial delegated lenders. Only delegated lenders can lend on our behalf. They have been taught, they have been trained in our Washington, D.C. office. They know exactly what we're looking for. So when the exporter, that's the borrower, defaults, we salvage the delegated lender. So my relationship, Exim Bank, is with a delegated lender, and the borrower, that's the exporter, the relationship is not with me, but with the delegated lender. So this is a guarantee to a commercial lender, which makes loan to an exporter to purchase or manufacture US goods and services. By the way, sometimes exporters are required to bid on a project, and therefore they need a standby letter of credit that a commercial bank can issue on behalf of the foreign buyer just to bid, right? Banks typically require 100% collateralization. But with the backup of the working capital guarantee, the collateralization is only 25%. Next slide, please. So with a working capital guarantee, it's 90% guarantee to the delegated lender and would assist small and medium-sized companies in obtaining working capital to purchase goods and services for export. And it may be transaction specific, just one project, right? Or it could be a revolving line of credit wherein there are many, many foreign buyers associated with the credit facility. And we don't have minimums, we don't have maximums. But since it's the delegated lender, right, lending, then they can impose any minimum or maximum amount because they're the lenders anyway. Now, the loan supports very generous export-related inventory, which includes work in process, 75%, up to 75%. I'm using the word up to because it's up to the lender, and up to 90% on foreign receivables. Next slide, please. So for credit insurance, which is a direct relationship between Exim Bank and the exporter, as I mentioned, it's for risk protection. It includes both commercial and political risk, and it becomes a sales tool because a marketing tool, because it allows the exporter to become competitive. And generally, you can provide credit terms up to 180 days, and some products qualify for 360 days. And it can stop right there actually, but if you want to use it as a financing tool, then go ahead and inform the bank that you have credit insurance to increase the level of comfort of the bank to lend against those receivables. And it can be assigned to the lender so that when it comes to a claim, instead of giving the money to you, we give the money to the lender. That increases the level of comfort of the lender to lend against those receivables. Next slide, please. Now, the risk covered is commercial risk and political risk. Commercial risk involves when the foreign buyer becomes insolvent or becomes bankrupt, or because there's a protracted default. They said that they're going to pay on the 30th day and they didn't pay. So that's protracted default. Now, for political risk is because the government is involved, that the money cannot be transferred to you. There's war, revolution, insurrection, and then cancellation of an import or export license. That involves the government. So that's political risk, and that can be covered. Actually, even though you have a very, very strong foreign buyer, you cannot predict country political risk, like this pandemic, right? I'll give you an example. One of my customers wanted to get the products from the port, and the government said, no, you can't do because there's a lockdown. So it's not the exporter's fault. It's a political risk, and that can be certainly covered under a credit insurance program. Oh, just by the way, just to let you know that commercial disputes are not covered. So you have to make sure that you follow the contract black and white. Next slide, please. So when it comes to short-term credit insurance, it can be from the coverage could be 90% to 100% coverage, depending on the policy selected, the products exported, and the buyer classification. And there are two kinds of policies. First is the multi-buyer umbrella coverage, wherein we would provide a total aggregate amount for the exporter, right? Just look at it this way. And then falling underneath the umbrella coverage would be different foreign buyers. The opposite of that is single buyer, meaning to say that you only have one foreign buyer, you don't need an umbrella coverage, and you just need a one-on-one credit insurance policy. Next slide, please. So the third solution that we have is related to foreign buyers financing, which is medium-term financing for 5 years, right? And up, right? And it's generally for capital equipment, buying bulldozers, um, tractors, airplanes, etc. Now, when it comes to foreign buyers financing, 100% minus 15% cash down payment to be paid by the buyer to the exporter equals 85%. So 85% is what we will finance. And the repayment period between our specialized lender and the foreign buyer is 5 years, exceptionally 7 years. And the role of the exporter is simply to be the recipient of funds as and when the foreign buyer draws down from the line of credit. I've seen 10 million or less as the average amount involved with foreign buyers financing. There can be long-term financing also for projects like government-to-government road infrastructure. So to summarize, right? Next slide, please. Here's how we can help you. We can obtain pre-export working capital to US exporters to help you sell overseas and enable US exporters to become competitive, and that we can arrange through our credit insurance program, and we can arrange foreign buyer financing under term loans at the US interest rates. And the next slide would be my contact details. So look forward to helping you in any way. Thank you so much.
Thank you, Susan. So we have a question that I think applies to you, but it says, can SBA funding be used for the EXIM 15% equity requirement?
SBA and Exim Bank cannot commingle our financing. It's either you borrow from SBA or borrow from Exim Bank support. David, you have any comments?
Generally, you can't go, as Susan's pointed out, you can't go ahead and use to get 100% financing. You can't get financing from two separate federal agencies. You can't commingle those, as Susan's pointed out. But SBA does allow borrowed funds to be used as equity. So you can use borrowed funds as equity if they're on a full standby. In other words, you can't take any payments, can't be made on that loan during the life of the proposed financing that you're getting.
Okay, thank you for that. So we have another question. It reads, why would an exporter choose to work with SBA versus Exim when it comes to a loan guarantee?
You want to know what's the difference between SBA and Exim Bank? Okay, first of all, we require made in the USA products and services, and SBA does not. And our loans go beyond 5 million. So, and we also provide foreign buyers financing. And Exim Bank is all about supporting exports. When it comes to SBA, they actually can handle domestic financing and also export. So they are more flexible. But anything else, David, that you can mention?
Well, as I point, one of the things we talked about, the things that we complement each other is on the working capital loans, which is a revolving working capital loan. The other financing, term financing, where you want to buy a fixed asset, or if you're trying to go ahead and do some expansion through permanent working capital, only SBA provides that. The loan that we have that kind of matches up for U.S. businesses is the working capital loan. And as Susan's already pointed out, our maximum loan is $5 million. Exim Bank can make a loan of any size. There's some other internal conditions based on ownership. Like I said, that you have to be 51% owned by a U.S. citizen to apply for an SBA loan. That's not the case with Exim Bank. So each has their individual portions. That's why it's important to work with the Small Business Development Center. They can help you go ahead and make sure you understand what are your needs, how are you going to, what are you trying to accomplish, and then which financing, where you would go to get the financing you're looking for.
Oh, also, just a reminder, we have restrictions on military buyers. So if that's the case, SBA can be the solution.
Okay, I think those are all the questions. So would you both recommend though working with both organizations, right? Or would you start with one and then go to the other, or just make sure you have that communication with both SBA and both EXIM, just to make sure that all bases are covered?
Actually, we don't compete with each other. You
Okay,
can likely start with SBA. And when it comes to SBA, typically they would require credit insurance. So here I go into the picture and we work with each other.
Yeah, it's like I said earlier, Shariah, that actually our programs are meant to complement each other, not to be in competition. So it's really about, that's why they have both Susan and myself sitting in the USIAC, and it's to help whatever the need of the business is, to make sure that we can provide them and point them in the direction of where they can get whatever it is they need.
okay, awesome. I also have two more questions. What size businesses will you work with?
For SBA, we're limited because we're the Small Business Administration by the size of the business. Size is determined by either for businesses that are usually retail or wholesale businesses, it's based on an average of 3 years of revenue over the past 3 years. And you add that 3 years revenues together, average that out. And for the type of business, it's based on the business's NAICS code. That's its North American Classification, Industrial Classification System. Every business is a specific type of business. What is their primary industry? What do they do? In that NAICS code, we have a size standard for each of those NAICS codes. So for, again, for, like I said, for businesses that are either a retail business or a wholesale business, those sales can range from anywhere from $1 million up to $40 million, depending on the NAICS code. On manufacturing businesses, it can range anywhere from 100 employees up to 1,500 employees. So it depends on the NAICS code. You can go to our website, or when you're working with the Small Business Development Center, they're helping you put your plan together. They'll help you identify what is your primary NAICS code, and from that determines what's going on. Susan, I'll let you talk about EXIM. Go ahead.
Well, when it comes to EXIM Bank, we both work with small and non-small businesses. And of course, we, just like I mentioned earlier, we don't support startups as of this time, right? So we have to make sure that the entity has 3 years of revenue producing financials and also a DNB number.
Okay, and I think we have one more question that I think you may have answered with my question, but just in case we missed something. The question reads, at what stage would I come to one of you if I need to work with my SBDC first?
SBDC is actually funded by SBA. So the next step is from SBDC to SBA. Am I correct, David?
Well, yeah, generally, say for instance, they went to the international SBDC, the counselors there are going to work with the client to help them identify what are the needs based on what their business plan is. And then from there, they can refer them to the resource that's out there to go ahead and do that. That's why I talked about earlier, there's a network of resources out there to assist you. And the SBDC is kind of that spoke at the hub at the spoke of the wheel, that you go into them and they can point you down whatever spoke will take you to whatever it is you need, your business needs to roll along. How's that for an analogy?
All right, that was awesome. Thank you both. I think we've reached the end of our hour. So Heidi, if you want to share our closing slides. Okay, so just for the audience here, if you did not get a chance to attend our annual export conference, the recordings of those are on our YouTube channel. It took place May 19th to the 20th in Washington, D.C. So if you've not already subscribed to our YouTube channel, please make sure you go to our YouTube channel and subscribe. Also, NASDAQ partnership with NADAC for CGBP credentials. So there's an exclusive access for a special offer. The link is here. It's also on our NADAC website. You'll get a discounted package fee also, which includes 4 domain study packs. You get a 20% discount on MindEdge for the exam prep study modules. Also, you get a practice exam and the professional exam fee, I guess, of the value. So you get some discounts if you log in and take that certification through that partnership that we have with NASBite. And then finally, stay tuned for upcoming webinars. We have a webinar on June 15th at 2 p.m. Eastern time. Introduction to cryptocurrency and blockchain for use in international trade. So don't miss that. Make sure you go to our website and register. Also on June 30th, 10 a.m. Eastern time, benefit from the future of online B2B sales. So again, you can find the registration links for both of those webinars on the NADAC's website. And we would like to, on behalf of NADAC, thank our speakers for awesome information today. Thank you, David. Thank you, Susan. We really appreciated the presentation. Again, there's your contact information, and the presentation will be provided to all attendees, not immediately following, but following the presentation. So you will have access to their contact information and the content in this webinar. So thank you all for attendance and have a good day.